Hello, everyone. We are live. I'll let everyone get situated, get on. Oh, yep, it's bringing everyone in.
Welcome, welcome.
Welcome.
Live. Now that's scary.
It is slightly intimidating, especially for this topic of conversation. You have nothing to be worried about. I feel like I'm a little out of my wheelhouse, so live should be more intimidating for me than you.
I know this is a little out of our wheelhouse, hence why we brought on an expert to talk with us about it so that we could get some knowledge and information about this. So, should we go ahead and kick it off? Yeah.
Yep.
Welcome, everyone. Thank you for joining our webinar. This is the first we've done like this. We plan on this being a series that we're going to do continuing. We already have one scheduled for next week. So if you're on our email list, you will know about them, and we're going to be covering different topics. So tonight's topic is actually one that we were getting a lot from you guys about increasing food prices, inflation, and what that means for agriculture and ag's economy. We got a lot of questions from you guys, and our expert here is Dr. David Anderson from Texas A&M AgriLife Extension Services. So thank you, David, for being here. I'm not going to give any more introduction. I'll let you introduce yourself, and then we can get started.
Sure. Well, thanks for inviting me. I appreciate the chance to be with you. I think it's a great topic, and it's one that's it's on everybody's kind of mind. I judge sometimes some of these things by the number of media calls I get from whether it's newspaper or TV reporters, and I've gotten a ton of calls about this basic topic lately. So, by way of introduction, I'm David Anderson. I am, I'm an ag economist, a professor in the ag economics department at Texas A&M. I'm an extension economist. My area of work is livestock, meat, and dairy. So, I kind of cover the livestock, animal, and what we get from them front, basically. And so, it's funny, in some cases, we might talk a lot about rising meat prices or milk prices or eggs or whatever at the store. And so that's kind of the area I spend some time on, but we can talk about the other stuff as well, because when we think about feed costs, I tell people, if you want to be a good livestock economist, you have to start by being a good grain economist, because that's what we feed all those critters. So you gotta, that's the input to getting all the stuff we want to get. So we can certainly hit the waterfront of all those things. I think it's a great topic.
So I was actually instructed by someone from my community that we absolutely need to start this conversation out with howdy, because apparently that is a thing on the Texas A&M campus. And so they said that'd make you feel right at home. So howdy.
Yep, we all got to say howdy to each other so we all feel good. The appropriate greeting.
Yes. So this, the reason we extended our invitation out to you is actually because, backing up a little bit, Tara and I had sent out a podcast that we had listened to that it talked about the war and kind of how that was playing into what they called a global food crisis. And then after that, we had just had comments coming in from our community about it. So I do want to touch on that, but I actually want to back the timeline up a little bit, because I think there's a lot of conversation pointing to the war right now. But if we really assess the timeline, there were issues that stemmed from COVID, the pandemic, and then even just a little bit for that. So I would kind of like to maybe start with looking at how the pandemic affected the ag economy first, because I feel like that's a key component, and then we can kind of move the conversation into inflation and Russia and what happened after that.
Sure, and I think that's really, I think that's a good way to think of it. And we can talk about inflation. We may talk about it in terms of higher prices, and there are some inflation type things, some things about inflation I'd like to talk about, but let's think about it in terms of higher prices, higher costs. We'll come back to those more macroeconomic ideas, so we have a firm footing on that. But if we think about why are prices going up, we can go back in agriculture to some reasons for prices going up that have nothing to do with the pandemic, that the current war in Ukraine, that kind of piles on to that subject. But if we think about higher prices in a couple of senses, we had higher feed costs already, corn, soybean prices. And it's not that we had a short supply in the US or a drought or some disastrous crop. Now, our big competitors in world markets, like places like Brazil, they had a big drought. So they had tighter supplies. So if you're Japan or China and you're buying feedstuffs for your livestock, and Brazil doesn't have anything to sell, they're going to come to us. We have these supplies, so we can think about tighter supplies worldwide because of those drought problems. Yet that demand for livestock feed was still there. So all of a sudden, feed costs jump up dramatically, and so that's a pretty easy example of it. And I think sometimes gets lost in all this discussion. Our feed costs were already higher than they had been. And we had gone through several years of relatively low feed costs. If we think about feed for livestock, corn and soybeans, relatively low prices. So they jumped up because of that. I might point to some things, even in the U.S. That are related to the drought we're going through now in everywhere from basically Texas north and west, all the Mountain West, all the West Coast, and into the plains. We've got a pretty serious multi-year drought going on. And so if we think aware of where some wheat varieties are grown, for instance, that northern tier of states, North Dakota, Montana, Idaho, we might think of Durham wheat that's grown in those states, and also California and Arizona. So those are specific wheat varieties. So we think of Durham wheats; those go into pasta. Some of the white wheats go to baking. Our hard red wheat goes to bread. So we have all these various things going on. Yet we had sharply lower yields in those states, really drought related. And so if we think about higher wheat prices for some of those parts of wheat that go into all these goods that we buy at the store, right? Bread, baking, flour, everything. All of a sudden we've got pressure for higher prices because of tight supplies. And that's Mother Nature, right? That's not the pandemic. It's not that turmoil from that or from these other things. That's a supply problem, and it's an age-old thing of drought. And so we have these pressures really before the pandemic. Now, I think one of the things about the pandemic, in terms of we think about prices or the economy, it introduced this huge change, this huge volatility. And the rippling effects of that back and forth, I think, are still with us. I think that's part of what we're seeing now. That's part of when we look at higher food costs, inflation, everything else. That's part of what's going on in all of that. It's just those rippling effects. But in ag, we got something a lot more basic going on that's since the beginning of time, and that's drought. And that part's still with us. We're culling huge numbers of beef cows right now. And a lot of that is just plain drought related and feed costs. And you think about price for the animals relative to what those costs are to keeping it's forcing us to cull more animals, which means down the road we're going to be looking at a lot tighter beef supplies and a lot higher prices. But it's triggered by drought, not from some of these other things. And I think, when I get the chance to talk to media folks who don't do agriculture stuff every day, it's an opportunity to really reach a whole new group of people about agriculture and how things work. And it sort of starts with the rain falls, the sun shines, the grass grows, and here we go. So there's this basic understanding of that I think is really helpful. It's a great chance to talk with people about it, kind of increase that understanding a little bit.
So you said some very important things that I think we could take this conversation in a bunch of different directions. I guess the conversation I will steer it towards, and hopefully we maybe circle back to some of the points, but you basically talked about the drought and how some of these issues aren't the war, they aren't the pandemic, it's just Mother Nature, right? And then you said something I think that's very important that my husband and I have kind of had conversation around, which is that we're in a drought right now, which is going to decrease our herd prices. Well, eventually that's going to circle back around, as we've seen in the past. And the cattle, the cattle numbers will come back, hopefully, eventually. But then we're kind of, it's a cycle, right? Because then we're right back where we were before with, introducing larger numbers and not, we're back at that bottleneck. So I'm curious, is there something, like, what do we learn from this? Is there something we should be doing as producers differently to better prepare so that we don't have that same issue just kind of cycling over and over again?
That's an interesting idea. I think, if we think about a cattle cycle, and we think about cattle being this cyclical thing, and it's often, I usually tell people, well, we have a cycle for two reasons: biology and economics. So when our prices fall really low, we start culling our herds till prices go back up and are profitable. But that biology time lag of increasing production, right? Because if I'm going to hold back more heifers, there's years before that increases beef production. So we've got this biological time lag and this and economics, but we always have drought affecting this cycle. I think that's a really tough kind of management nut to crack, because the old rule of thumb is you can't feed your way out of a drought. The feed is too expensive. And so then you're really forced to, okay, what do I do about either I cull deeper in my herd or I buy feed? Well, that's not going to work. It's really expensive too. Or I look at ways to, maybe I send some of my cows somewhere else to live, either lease pasture somewhere or do something even in a dry lot type thing, some creative ways like that. But it still doesn't, it's not a great answer, because we're still stuck in a drought, and the uncertainty about drought is you don't know when it's going to end, right? So, I would tend to think, and I'll look at this going forward from where we are now, following our big drought in Texas a decade ago, in 2014 and 15, we had record high cattle prices and calf prices. I think we're going to see those again, because the rate of culling in our nation's cow herd, we're going to be back where we were, at the peak of our drought, or even lower in cattle numbers, and the rebound from that will be even higher. So if you think about these higher, what I think are going to be record high prices to come, are there some ways to send animals somewhere else, heifers somewhere else to be raised? So it's very common in dairies, right, that we have folks who raise the heifers. You send the heifers off somewhere and they come back 2 years later, bred and ready to calve on the dairy. Are there some things to do like that in terms of calves? Now, obviously, there's cash flow, there's all kinds of things, but on the heifer side of it, that I would end up with my own heifers back that cost me a lot less money to feed somewhere else than it would cost me to buy them 2 years from now when everybody's looking for them, So that's another kind of strategy that it has some drawbacks, but I can't think of a lot of things like that are worth thinking about, or at least calculate on a piece of paper whether you think it'll work or not before. I mean, there's a reason we do these same things. We cull off the herds because we know that works, right? and it doesn't cost us any money feeding them somewhere else or anything else like that. It's, hey, this cuts costs, cuts the size of the herd as well, and so we tend to do that. Good question. I hope that's a decent answer.
That was great.
Go ahead, Tara.
Lots of food for thought, I think, is what you were going to say, or something similar, but lots of good things to think about there.
Yep.
Moving in a little bit to inflation, we've seen increased commodity prices, but we have also seen increased production costs. Can you expand on that a little bit, and what are the actual changes, and how are we seeing that distributed differently between the sectors, like producers, suppliers, just kind of that whole supply chain aspect of the increased prices?
So I'm going to take this answer in sort of several different directions. The first one is, we're seeing higher food prices at the grocery store. And a lot of those reasons are the same reasons we're seeing higher prices everywhere else. Our costs of producing it and getting it to the store are higher. Fuel costs are higher. Obviously, labor costs are higher. We have, we'll talk about, you see in the news the CPI, our kind of that big measure of inflation, that we've had the highest jump in inflation since the early 1980s. But we've also got unemployment that is roughly less than 4%. Were you going to say something, Natalie?
I was just going to say, for people listening who aren't aware of CPI, could you just quickly explain that really quickly, moving on to put that in context for them?
Yeah, good comment. The CPI is the Consumer Price Index. And that's basically sort of the broadest measure, the kind of the main measure of consumer price inflation, this overall price level. So, you know, uh, beef, pork, chicken, dairy, used cars, the works, everything goes into that and creates this sort of index of the overall price level in the economy. And that has been, oh gosh, let's say up 8.5% compared to the same point last year. Um, and it's easy to note that that's the strongest increase in inflation since the early 1980s. But part of what's going on too is we do have a growing economy. We have we have the we have unemployment that, gosh, I think the last statistics were under 4% unemployment. We've had the fewest people filing for unemployment benefits in 50 years. So really, why do we have higher prices for wages and labor and these other things? It's because we got a growing economy also, and we ain't got enough people to work, because the labor market's a market like everything else, and we have really tight supplies. Prices go up, and price is the wage rate. So let me take a step back to inflation as well, and say, if we look at inflation, this phenomenon in the economy, you run inflation when you have this extreme growth in the money supply, the supply of money that's out there. And really, if you don't have that going on, I'm not sure I could think of a case of inflation happening. And so, well, where have we gotten more? All of a sudden, this more money supply going on. Well, the things that a lot of people have cited. Well, we did do the stimulus packages and gave people money to help them get through the pandemic. That increased the supply of money out there. The Federal Reserve has been buying bonds and things too, but they've been doing that since the Great Recession. So that's nothing new that's happened. I think one of the interesting sources of this surge in the supply of money, and what we can think about, is when all of a sudden this supply of money goes up, we got more money chasing fewer goods and services. And so prices go up. So one of the interesting things that I don't think gets thought about enough is part of the reason for this increase in the supply of money, which is really all of us spending money right now. And that is, if we look at the pandemic and we look at when everything shut down, really starting in March of 2020, so the second quarter, April, May, and June of 2020, our economy actually shrank by almost a third because so many businesses were shut down. Nobody was out spending money, right? But there were a heck of a lot of people working from home and still getting paid. They weren't driving anywhere. They sure weren't buying any new clothes. I mean, what were they? But they were still working and getting a paycheck, but they were working from home. One of the interesting sets of macroeconomic data that's out there is the savings rate. How much money we save as a percent of our disposable income. Our savings rate went from, let's say, roughly 6.5%, 7% prior to the pandemic. It jumped to 25% that quarter of the year that the economy really closed up due to the pandemic. So if you think about our size of our economy, if everybody saved 25% of their money, that money is sitting somewhere. And we actually had 5 quarters in a row of a savings as a percent of disposable income that was over 10%. So if you think about folks saving all that money, folks that still had their jobs, obviously folks that were doing okay prior to the pandemic, they didn't spend any money, but they were still working, so they got paid, so the money's there. And we get out of the pandemic, and all of a sudden, people are going to spend that money. They're going to travel. They're going to buy stuff. So we have this huge amount of money that people saved, and now they're spending it. But we still have these constraints of, gosh, not enough truckers, which was a problem before the pandemic. Not enough workers in a bunch of different segments of our economy, which you think about packing plants, that was a problem before the pandemic as well. So we have a lot of these bottlenecks, right? And the bottlenecks in our economy mean we can't produce enough stuff to meet all those demands that are there, and prices go up. Prices have gone up because we got a bunch of money and people want to spend it. Prices are going up. We might think about gas prices or, diesel prices or, I was sitting here in my home office working from home, and I had it on the financial news one morning, that the futures for oil was negative, meaning we had a negative price for oil, which was really the combination of some futures market and options expirations and stuff like that. The cash price didn't go negative, but in the futures and options and derivatives markets right then it did. Well, markets work, and markets are a signal, and what the signal is price. So you can think about, well, if the price was negative, what's the incentive to pump another barrel of oil? What's the incentive to drill another well? None, really. So heck, none of us were buying anything to drive around in, right? So prices collapse. We quit drilling, we quit doing more, producing more oil. And so now we get out of the pandemic and we all want to drive around, and we all got to go buy gas and diesel. The price skyrockets because again, that time lag, right, of catching up. We're still on, even though we're producing more oil today than we did a year ago, we haven't caught up to what those demands are. And so really there's a market signal there. High prices create a market signal to do more of that, whatever that thing is. And yet that also meets the reality of getting out there, finding people to work, drilling new wells and everything else. So, but that same idea is the same throughout lots of our economies. So we have this big increase in the supply of money, and we got all of the folks itching to get out there and buy something. And we get higher prices.
So I feel like if there's one word Natalie, did you want to say something other? Okay. If there's one phrase that we have said multiple times tonight is food prices go up, prices go up, prices go up, just over and over. That's been a theme. So my question is, and you might have to pull out your crystal ball for this one. If food prices are up, will they ever go back down? Or once prices are, a certain price and people get used to paying that, are they going to stay there? What happens after this?
That's pretty interesting because, if you dug into the consumer price index data, folks who work on that all the time, researching where they break that out into a couple of categories. One is food and energy that they separate out because food and energy, both of those tend to be more volatile. They go up and down. If we think about food, a bunch of the parts of higher food prices, they're higher for the same reason everything else is. Cost of fuel, cost of packaging, cost of transporting the goods to the stuff to the store, all of those things are higher. So they're higher for everything. But some of the basic underlying parts like wheat prices, corn prices, beef prices, how do those adjust? When do they go down? Well, I might argue it's going to be hard to see lower beef prices. The way we would get, because, we mentioned briefly how many cows we're culling. So longer term, our beef supplies are going to be lower. And that high price, hopefully the end of a drought and high prices should get us to produce more, which causes beef prices to go down. But here we are. Last year, we had record large beef production last year, and we still have these high prices. And a bunch of that's because consumers like beef and they're going out there and buying it. And we like that. That's a good thing, right? But what we have to have at that point is, profitable prices that encourage producers to produce more. Now, I hope we can avoid going in the direction of packer margins. That's a lot longer than I think you got scheduled for a webinar, right?
We weren't going to bring it up.
We could look at grocery store margins in the meat case as well, which have been extremely large because we're all going to the grocery store and buying meat, particularly since the pandemic, right? And so far we're all still doing that. And we've got we're producing less pork than we did a year ago. Pork prices were unprofitable. We've cut production. There's some disease issues there on the pork side that's limited some productivity. And so we're producing less pork than we did a year ago. And if we produce less, we're probably going to have higher prices. Chickens, some of those same issues. And now we've got high pathogenic avian influenza in the poultry side of things that's hitting both egg production, turkey production. Not so much broilers yet, but I think more of the incidence has been in eggs and turkeys. Eggs and turkeys. But that disease, pretty devastating on the birds, and so we lose production because of that. So, that's kind of a fundamental reason for lower supplies is higher prices. So, how do we get those food prices to decline? Well, we need more production. That's sort of how that happens. That's the market signal to produce more is high prices. So we tend to see that happen in food and agriculture. Now, what could get you to some lower prices for meat, let's say, is gets so expensive folks decide not to buy. They're going to buy something else or do without, which means that they buy less because the prices are too high for them. And then prices come down because we don't have that demand still there. So that's one area where you could see higher prices. Just the normal reaction, economic reaction to high prices is to buy less, which causes lower prices. But so far, we don't have a lot of that going on. I might say at wholesale, if we looked at some beef cuts at wholesale, ribeyes have been below a year ago for quite a bit of this year. But ground beef has been above a year ago. We might think of that as some evidence of consumers reacting with their wallets and buying more ground beef and fewer steaks, which is what we would normally see as a response to high prices. So we may have some things like that going on already, but how do we fundamentally get lower prices? Well, pump more oil so we got more cheaper fuel, produce more food, more of those basic foodstuffs, particularly the building blocks for meat and dairy, corn, soybeans, alfalfa, hay, those things, so that our production costs are lower. And, one of the difficult things for that is it takes time, right? We also have high fertilizer costs. So those building blocks of growing those crops, because those are high, it's hard to plant more acres profitably because the cost of growing the crop is higher. So that's a pretty sorry answer for a really good question. When do prices go down?
No, it was great. It actually was really great. You've given every time you answer, it's like a lot to think about, which is the food system is not simple. It's not straightforward.
That's not simple, is it?
No.
And it used to be the old example is if you took if we looked at like some of the food items at the store and we looked at what's the value, the farmer's value of that thing. Used to be the wheat in a loaf of bread at the store had a lower value than the plastic bag the loaf of bread was in. And so if we thought about the total cost of that loaf of bread at the store, that the flour in that bread was really small compared to everything else in getting that to the consumer. And so, we might, in response to high prices, produce more wheat, but that doesn't necessarily have a real big impact on on our grocery bill.
So I I mean, hypothetically, again, to what we just spoke to, I know we're asking very like black and white questions, and I hope we're aware, and I hope everyone who's listening to this understands that like the answer is not going to be that way. It's just an interconnected web. It's going to be a gray area answer. Um, but hypothetically, I mean, we can expect the inflation to, level off. Do you have a timeline of what that looks like for us? And when it does that mean that there's like a recession looming after that? Or like, what does that look like?
Recessions are oftentimes the answer to inflation. Inflation's sort of a bad thing in the economy. It creates all kinds of bad incentives you really don't want. Recessions typically cure that. But recessions, that's pretty tough medicine because it means lots of people out of work, high unemployment, all kinds of other problems. So we've had a long run of several decades of basically no inflation, basically pretty darn close to a zero inflation environment for decades. And that relates to very low interest rates for decades because if you were bank loaning money, you really didn't have to consider an expectations of high inflation to make that interest rate higher. But heck, I forgot where I was going with that answer. So let me come back to one thing. You said, we might think of this leveling off. I think that's an interesting point, particularly in meat. When we measure inflation, we're always comparing prices today to a year ago. Because a lot in our economy, there are seasonal patterns to prices in our economy. So you want to compare April to April of last year, for a good comparison. A great example might be of seasonality is turkeys. Turkeys is a holiday driven demand for the whole bird, right? So if I want to compare turkey prices, I want to compare November to November, right? Because if I compared November to April, well, nobody wanted a turkey in April. They wanted it in November. It's not a good comparison. So we compare those things. Well, particularly in meat, particularly in beef, prices really took off in the second half last year. And so if I looked at what was in, oh my gosh, the last consumer price index report, beef prices last month were actually lower than they were in October of last year. Not very much, but they were actually lower, 2 or 3%. But if I compared to a year ago, February, is the data I'm thinking of, prices were up 15 or 20%, something like that. So if we compare to the right time period, we got this big surge in prices, but that surge in prices happened last year. So if we think about that, what happens this fall? What's our mechanism for prices, like to say beef prices, to keep going up at the same pace that they've been going on? I might argue not a whole lot. We've got a record number of cattle on feed in feedlots. We're going to have plenty of beef production. Our costs of production are higher because feed costs are higher, but those feed costs are contributing to producing cattle and calves in the future, not those, not necessarily determine the cattle we produced last year, which are on feed today. And so what's the mechanism for these sharply higher prices to continue to increase? I don't know what that is. I mean, it's hard to conceive of one. I think people sort of expect fuel costs to be coming down as we produce more, as our oil production goes up. So if those come down, that's a building block to everything else, how we get stuff moved around. And so, it wouldn't surprise me at all as we think about in the fall, we'll be talking about prices being flat to a year ago. So we've had this surge of inflation as people spent all that money they saved. But then once they've spent all that money, they don't buy anything. Prices go down at that point. And so, I mean, we still have fundamentally a growing economy, low unemployment, and that's really, a growing economy and low unemployment are really kind of building blocks for actually a lot of good things happening. And I think it's also interesting when we think, we always talk about this, my God, costs are higher, wage rates are higher, holy cow. But, when wage rates are up, people are making more money. And what do they do with that money? They spend it, which creates a growing economy. So we got a complex system. Pretty interesting. I see a
So-
question in the chat
Yeah,
box. You want
I
me
was
to
about
take
to
it?
say, well, so I'll expand on it slightly. You mentioned feed prices. So we got the question in the chat about what are your thoughts on ethanol and the food prices, and I'll add to that a little. I had heard that that we're going to increase like how much ethanol is allowed, like the percentage went from 10 to 15, I think, of ethanol allowed in gas. So yeah, so just to expand on that also, like, is that going to add like another layer of complexity to these food prices, or just ethanol and food prices in general?
Yeah, ethanol and food prices, pretty interesting subject, particularly, if we went back to 2005 when the energy bill passed, that mandated ethanol use at much higher levels than we had used in the past. We'd always used some ethanol, but that bill mandated use, and the mandated amount of use increased over a set number of years. So we're to where we use 10%, roughly 10% in most all of our gasoline. So that really led to a surge in corn prices and soybean prices as well. Gosh, if we look before that, I'd probably guess and say the average corn price for 30 years before that bill passing was probably $2.35 per bushel. I mean, that led us to corn prices over $4, over $6, particularly when we put a drought in there in about 2012 or 13, whatever year it was in the Corn Belt. We had corn prices over $6. So ethanol really built a whole new demand for corn and led to much higher prices. So higher production costs for meat and dairy products, higher feed costs. Those higher prices also were profitable for corn farmers. And so we went from planting and growing, say, corn in, say, 77 million acres, maybe planted, something like that, to where, we planted over 90 million acres in recent years. And even now we're thinking, acres at 89 million, whatever was in the prospective plantings report is a real disaster because it's not enough corn. We need more because we got a lot of critters to feed. Now we think what were huge numbers of acres 15 years ago is not enough today. So that did lead us to a higher level of prices in feed costs, at least. But it's also ethanol was used as ethanol, it replaces MTBE, which is methyl tertiary butyl, whatever, MTBE.
We'll
which is an
believe you on
oxygenase,
that.
something like that. It's methyl something or other, whatever. And so it replaces that, which is an oxygenate in gasoline, burns cleaner. It's certainly renewable. I mean, that was one of the big pitches at the time from the administration was this is a renewable fuel. At a time, oil prices were going up. We can produce this stuff here. Now, the unintended consequence part of it sure drove up feed costs for livestock producers and was really disastrous for livestock producers. It was great for corn farmers, but really bad for livestock producers. That did lead to some higher costs, yet, over some time, markets adjusted as well. We produced a lot more corn because prices got us to produce a lot. High prices got us to produce more. The going, they have talked about, and I'd probably argue the corn industry, they've wanted E15 forever because the ethanol industry is a huge demand for corn, for what they're producing. And so, from their perspective, they would like to have more buyers of corn, boost prices. On the flip side, it's not so great for livestock producers, although to keep people, and nobody's ever happy with me when I say that, but I tell them I'm the livestock economist. So this is a disaster, right? This ethanol stuff. But we feed huge amounts of distillers grains, the byproduct of ethanol production. Fantastic protein feed. Actually, that's, you know, I probably shouldn't say most, but I would say a huge number of fed cattle are being fed distillers grains. Uh, Instead of feeding like we used to the corn, cracked, rolled, or steam flaked, wherever, depending on where you are, whatever, we're feeding distillers grains as part of that diet, the byproduct of ethanol production, the byproduct of corn. So that's created a whole new feed source there in a different form. So, you think about E15, well, that'd be a lot more demand for corn, and prices are already too high. I might think of $8 a bushel or some awful number like that, which means, we might have more demand there, but it also interacts with the whole oil energy complex as well, which makes it a lot more complicated thing. But if we create more demand for it, um, it means higher prices, I think. So, and those higher prices are good for some people and bad for others. I might say too, one of the interesting things about ethanol is it's one of these things that uh, really pits one part of agriculture against the other, right? Because I might argue that everything corn farmers made out of ethanol, they got from livestock producers. That it transferred money from one part to the other part. And I'll let somebody attack me for that. That's cool. But like I said, I'm the livestock economist, so that's the way I'm going to pitch it.
Well, I'm a dairy farmer and Natalie's a cattle rancher, so I think you're okay.
Yeah, we have unfair representation here.
Yeah, we'll let the chat comments fight it out. We'll stay over here.
We did a study, and I'm part of our Agriculture and Food Policy Center here at Texas A&M in the Ag Economics Department, and we did a study in about 2004, 5, 6, right in there about ethanol, and we looked at a bunch of these things, food costs, and with food, I think, like we mentioned earlier this evening, sometimes the agricultural component of the food item is really small compared to the other costs of baking the bread, for instance, things like that. And so the effects of food prices on ethanol kind of directly, we might argue are pretty darn small. Now, they had a much bigger effect on livestock, and typically meat products, the say the share of that retail dollar that livestock producers get is typically larger than crop farmers. And it really depends on the level of processing. Wheat goes through a lot of processing before it's bread or spaghetti. Tomatoes, you're getting them fresh. There ain't much processing there. Meat, really all you're doing it is, going to a packing plant and putting it in a package. That percent of the kind of the farmer share of the retail dollar is higher. And it's reflected in those how much processing has to be done. So in some cases, the effects of ethanol are fairly small on food prices.
Natalie, did you have a question, or do you want me to?
No, you can go ahead.
Okay. So pivoting a little bit to what would you say? We have like two more questions I want to get to, but I'll ask this one first. What can farmers do to prepare for the lack of supplies and the increased cost? Any suggestions there on like being prepared for the future and what this is going to do?
I usually pop off at this point and say something about being creative or trying to be more creative. And that's easy for somebody at a university to say, I mean.
So maybe a better question is explaining what you foresee coming for producers so they have a better idea of maybe changes or creativity things they could do. But I mean, that's kind of what I was going to ask. I was going to say we've spent a lot of time kind of assessing the history, what we were facing before the pandemic, kind of what the pandemic did. And I was kind of going to roll us into, present time. Here we are with the war. Where does that put us now? And what do you see moving forward can we expect from the wars now added contribution to everything else we just discussed about? And maybe discussing that and just kind of painting a picture of the upcoming landscape will give, producers a better idea of what we're up against and what they can do in their own operation.
So I think those are great questions, and I didn't mean to pop off about that one thing, but usually that's the response I get. Yeah, dude, easy for you to say. But
Yeah.
we we might think about stuff like, for example, the further east we are, where we have a lot more improved grasses and pastures that, if you're doing some kind of Bermuda or something like that, you're fertilizing those a lot. So what do we do when fertilizer prices go through the roof like this? Well, one thing is we use less of them, right? Which that's going to take its toll over time in terms of how much we produce. But one of the more interesting questions we get from people more about are incorporating different species in their grazing systems. We're thinking about cattle, for instance, more clovers or legumes that naturally fix nitrogen in the soil, where you can have maybe a broader mix of plants. It's going to change your stocking rate. It's going to change some of those things, but you you know it's it's possible you may spend enough less on fertilizer that you're more profitable, or you get through this quicker. And that's not really a short-term change. That's really a longer-term change. But of course, the short thing is, well, everybody's going to sit there and roll the dice. Can they get away with less fertilizer, right? Um, and so, I think that's a good example of what different people are trying to look at, maybe in more grazing systems for more livestock focused stuff. But how do we how do we do all the stuff we've been doing when certainly costs are higher, and that time lag too? I can say that when costs go up, those costs get translated into higher prices. But it's that time lag of when those higher prices come to pay you for those higher costs. And the other thing is, the part we tend to gloss over as an economist is that's pretty disruptive stuff in our economy, particularly for individuals. Because I can say, okay, if costs go up and nothing else changes, we're going to produce less. We're less profitable because costs are higher. We're going to produce less. That results in higher prices for what we're selling. But typically, not everybody survives those higher costs. How do we cut production? How does the market cut production in response to higher costs? And a lot of times I tell, everybody producing doesn't get around and hold hands and sing Kumbaya and decide to all cut 2%, right?
Yeah.
The bad thing is, typically what happens is somebody produces less, and sometimes people go out of business because of those higher costs. And so, it's really a hard thing as we go through these. So, that's where I kind of say, I think there's going to be a lot of people try some creative things, but we certainly have, there are people, we got this boom in folks going to produce and brand their own meat or milk or whatever, or doing a host of different things. And they're trying to figure out is that a strategy for them to be successful in the future? And that's not something that's going to work for everybody, but I think a lot of people are trying those things.
That actually goes into our last question that I wanted to ask you so well. So a lot of the people in our community are trying direct to consumer beef sales, direct to consumer cheese. I mean, lots of different things. And obviously they're having to increase their prices. And so one of the questions that we had was kind of, how should we be discussing this with our consumers? Like, as farmers, how do we better convey these price increases, why they're happening, just trying to communicate that to them? Because if you're a direct consumer beef, especially if you're like a high end beef, like, you're already charging quite a bit. So then to have to explain these additional price increases, if you have any thoughts on that, that'd be great.
It does strike me that when, if you have some consumers who are already interested in that product, they're interested in knowing and they're interested in knowing how it's produced and what all goes into making that product. So you got a much better angle or opportunity to explain that to people, to your customers, than probably the grocery store does,
Mhm.
because they're already engaged and interested in what you're doing. And so you may have a better opportunity to explain that rather than some guy putting a, typing out a note and sticking it on there and, hey man, eggs are high. You know, I mean, and putting that on the door of the ice box, Um,
Yeah.
but still, that's still having that conversation with people is really hard, because we're all faced with, even folks doing something like that are still faced with higher costs,
Mhm.
certainly higher fuel costs. And if you're in a drought, my gosh, you got even harder time producing the products you're trying to produce and sell. So, but you might have a better chance at it. But, I tend to think the more, we have so many people who are a long way from agriculture today. Um, they didn't have parents or grandparents, it's further back for them. They live in cities, they live in towns. We got a big complex system. Um, but I tend to believe the more people know about how their food gets to them and how it's produced, I think the better off we are. Because I think then they understand more about what's going on and why, and then they know why those prices are higher. It makes sense to them, and that I think that has to be a better situation than somebody's always going to complain. But we get this chance to sort of bring people along into what folks really face to produce this stuff, and that has to be. I think that has to be a good thing. Let's say that. It's
No,
also
that
hard because then we got to waste time explaining to people. But I shouldn't say it's not a waste of time, but we have to spend time explaining to people, hey, here's how we make this stuff. Here's how we do this. Here's every step of the process. And then all of a sudden they understand, hey, this is not hard.
No, that's great. That's really good perspective on that. That if your consumers are coming to you to buy beef or whatever it is already, like you have that avenue of communication. So like utilize it, explain what's going on, share that part of your story, more of the struggles with higher prices, so that it's not just a sticker shock whenever they see it on your website, the new prices, that they understand where it's coming from. Just like all other aspects of direct to consumer sales, that you're explaining what you're doing, what your operation is doing, and why someone should buy from you in the first place. And so just adding that component into kind of your storytelling method.
I think it's interesting too. So many people. There's tons of people that they've gotten on the chicken thing, right? They got chickens in their yard and they're getting eggs, and if they're buying chicken feed, it's higher too. You know, they're even the cost of them producing those eggs themselves, and they're I tend to a lot of people do that for a lot of other reasons too, because those critters are interesting, right? And they get a lot of value out of having them out there doing their thing, and but the feed gets a little more expensive for them too, and so even folks doing that still face these higher costs as well, unless you just got lots of grasshoppers for them or
Creativity, right?
yeah, that's right. That's right. Turn them loose on the grasshoppers.
Well, we're coming up on our hour mark, so thank you very much for sharing your expertise and your knowledge with us. I was going to say that I think one of the things you said in here to step back and sum all this up is that prices go up, and that's good for some people, and that's bad for other people. And the reason why is a very complex system. And I feel like that's a terrible but perfect ending to this this discussion, because there is no pretty bow to put on this.
Not a simple answer, is there?
No. But it's been really fascinating. I love conversations like this, and I know that our community really enjoyed this too. You provided so many. I mean, you provided a big picture for us to all think about, but you also delved into some really micro topics and conversations too. So thank you again for joining us and for helping us bring this to our community. We're very appreciative of it.
Well, great. Well, thanks for inviting me. I enjoyed it too. So certainly let me know if I can help you in the future.
Yeah, we will definitely keep you on our list of people to maybe come back
All
around in
right.
a year from now and say, "What? All right, we had you on record. Like, let's revisit some of your predictions."
I find to be a good, in what I do, you got to have a short memory.
Well, thank you so much. Have a great rest of your evening. Thank you, everyone, for joining, everyone that tuned in. Thank you for spending an hour with us tonight. And we will see you guys again next week, next Tuesday at 7 p.m. We'll have Dr. Sarah Place talking about beef sustainability. So we hope to see you then.
All right.
Hi, everyone.
Thanks.
Thanks again.
Bye.
Do you end it, Tara?
I'm trying.